You hear it on the news all the time, right? This one number that goes up or down, and suddenly it feels like the whole world is either celebrating or panicking. Well, today we're going to break down what is, without a doubt, the single most important concept for any investor to understand, the S&P 500.
And I'm not exaggerating here. This isn't just some abstract number for Wall Street traders. Nope. This little number has a huge impact on the retirement accounts of millions and millions of regular people. It's that big of a deal.
So you see the headlines, right? The market is up, the market is down. But have you ever stopped to ask, what exactly is the market? Well, for most people, most of the time, when they say the market, they're actually talking about the S&P 500. So let's finally figure out what this thing is, and, more importantly, why you should care.
Okay, so that's the textbook definition. It's basically a scorecard, a big list that tracks how 500 of the biggest, most important companies in America are doing. Think of it as a snapshot of the health of the U.S. economy.
But here's an even better way to think about it. It's the ultimate all-star team of American business. You know, not just anybody gets to be on this team. You have to be a major player. Big, profitable, and a leader in your field. It's the best of the best.
All right, so why does this all-star team matter so much to you? Well, because over time, it has been an absolute beast, an incredible engine for growing wealth. Let's look at the key number. 10%. Just let that sink in for a second. That has been the average return per year.
Yeah, that's the average annual return for nearly a century. Now, this is where the magic really happens. It's called compounding. At that rate, an investment of $100,000 could grow into $1 million in about 25 years. That's some serious power.
So you might be wondering, how does it stay so strong for so long? Well, it has this incredible built-in feature. It's basically a self-cleaning engine. Think of it like this. If a player on that all-star team starts to get slow or underperform, the coach benches them and brings in a fresh, hungry superstar. The S&P 500 does the exact same thing. Weaker companies get kicked out, and stronger, more innovative ones take their place. It's designed to win over the long haul.
Okay, so we know it's 500 companies, but are they all treated equally? Does a smaller company have the same pull as a giant one? Let's pop the hood and see how this thing is actually built.
You might think that with 500 companies, each one gets one vote, right? 1/500th of the say? But nope, not even close. The reality is, the top 10 companies, we're talking the absolute giants like Apple, Microsoft, Amazon, they have a way bigger impact than the other 490 companies combined. When they have a good day, the whole index tends to have a good day.
And you know what? That's by design. It's what we call weighted by size or market cap. It just means the bigger the company, the more influence it has. And this is actually a fantastic feature because it means you automatically own more of the winners and less of the companies that are falling behind. It's like your portfolio's always skewed toward the winning team.
So, this is all fascinating. But how do you actually use this? How does this knowledge turn into, well, your own personal investing superpower? Let's get practical.
Here are the three massive benefits. First, you get instant diversification. You're spread across 500 companies in tons of different industries without any of the complexity. Second, you can just stop trying to pick individual stocks. No more stressing about finding the next big thing. And third, you don't have to just take my word for it. Actual billionaires, legendary investors like Warren Buffett have said for years that for most people, just buying a simple S&P 500 index fund is the smartest move you can make.
But there's another benefit, one that I think is maybe even more important than the money. It's a psychological one. Understanding the S&P 500 isn't just about growth, it's about building your resilience. It literally acts as a filter for all the stress and panic out there.
Check out this mental flip. The news is screaming, the market is crashing, and everyone is freaking out. But because you understand what's really going on, your mindset is totally different. You're thinking, oh, nice, the 500 best companies in America are temporarily on sale. See the difference? That perspective is what allows you to stay calm and make smart decisions when everyone else is acting out of fear.
All right, let's bring this all home. If you remember just one thing from this entire explainer, what should it be? Well, it all comes down to the long-term view.
Look, let's be real. The S&P 500 is not a magic wand. It isn't perfect. It absolutely has bad years, sometimes really, really bad years. But over the long run, decade after decade, it has proven to be one of the simplest and most reliable ways for regular people to build real life-changing wealth.
So there you have it, a deep dive into the S&P 500. If you like this explainer and you want more lessons just like this,
please do me a favor and hit that subscribe button. And hey, if you want a clean summary of everything we talked about that you can read anytime, I made a totally free Notion page just for you. The link for that is right down in the description. Thanks so much for watching.